So now for those who are new to trading, or maybe you're considering becoming a trader, I would say the one thing, one of the beneficial things, let's just premise it. So at the very beginning, at the age of 14, I had my first job. From 14 to 17, I worked in a swimming pool store, and it taught me a lot about business. The guy that I worked for, he was an investor. Him and his partner were investing, and so that's how I first came across anything related to the stock market. Back then, he used to do a lot of uh, readings from the barons, and so I used to do a little bit of clerk work for him as well as other things. I was mostly like the hired help, and I basically did a little bit of everything, whether it was going out in service, cleaning pools, installations, etc., working in the store, even doing clerk work, answering the phones, etc. So basically, got a little bit of everything. Basically, whatever they needed to get done, I did it. So I kind of had the opportunity to, because I was a hard worker. And so they started teaching me the business of owning a business. And one of the first things I learned at a very early age was one, hard work, consistency, but also overhead. That was one of the biggest things that I learned about. That my boss back then, Italian guy, he always used to stress about overhead. Overhead was the killer. He said, you can make money, but if your overhead is too high, so it'll kill the business. And so those are some of the first things I learned. And then by the age of 17, I started my first business. So what got me into trading was, on occasion, when I would, when I would take my lunch break, I would go upstairs because the other boss worked upstairs. And I always wondered, because he answered the phones a lot, but he was always upstairs. And it was because he was upstairs basically managing the money, while the other boss was downstairs basically managing the business and keeping things afloat. The other guy upstairs basically did more of the technical stuff, answering phones, making deals. But I also noticed that for a lot of times, this is typically what he did. He took the money that they made from the business, and they were, of course, investing it. He did a little bit of swing trading, long-term investing, etc. And so that's kind of how I got my introduction into trading. It wasn't until I was about, I think, 21, I think it was 21 or 22, where I got my Series 7, etc. Ended up doing my licenses to become a broker. But then a buddy of mine introduced me to a friend that he had that was doing day trading. It worked for a day trade firm out in Manhattan, which is where I got my start. I started working for a proprietary firm way back when. I'm 41 now. I started trading back when I was, I think, 21 or 22. And it took me a considerable amount of time before before I actually earned my first check. My first check that I did earn was 22,000. I earned 22,000 the first month that I did take a check home. It was like a light switch came on. For a while, I was always at the point, because they would basically chart your progress, and it was always like to the point where I was like, gonna make money, come back down, gonna make money, come back down, gonna make money, come back down. And then the very first month, my very first month that I took home a check, I took home a $22,000 check. And then from that point on, I basically learned how to make money. Typically, say like between 500 and 1,000 a day on a regular basis. I did that for about 7 years, working on and off for different firms. I made multiple mistakes in my trading career and just in my life generally, revolving around trading. So I came back to it not too long ago. Been doing a little bit here and there, but of course doing it more and more so because I enjoy the independence. I do have a job. I did and end up becoming a nurse, related to. I blew up about $75,000 in trying to soul trade, trying to trade my own money. I worked for a prop firm, so they put up all the money, and I traded thousands of shares. I usually traded about 2 to 2.5 million shares a day, was the volume that I personally did back then. And of course, that's how they made their money. They charge you a little, a really, really low fee. Maybe you charge you like zero point 0.5 cents. I think I was down to like, I think I was down to zero point 0.5 when I stopped trading. Zero point 0.5 cent, half a penny a share, with like 95% payout. In any event, so for those who are looking to get into trading, just like anything in life, it takes time. It takes time, and it takes dedication, and it takes knowledge, right? Whether you want to be a plumber, you want to be a doctor, or a lawyer, there's typically a period of time where you have to learn basically the education. You learn a lot of the theory and the history of whatever it is that you're going to do. And if you're going to learn about nursing, they're going to teach you all about theory and where the basically where the skill came from. And then you start getting into the nitty gritty before you even lay hands, right? Before you even lay your hands on top of onto a patient, because they don't want you killing anybody. Just like if you were going to be a PA or a doctor, before you even get the opportunity to even see a patient, you spend, months, years before they even let you touch a patient because of the risk, right? And the same thing holds true. Trading, on the other hand, if you have a job and you've got a little bit of money, especially nowadays, just about anybody can get involved, but it has a huge high failure rate. I think it's like 90% or something of all people who get into any sort of trading typically fail, and it's usually because many of these individuals don't take the time necessary to basically educate themselves on the craft. And if this is something that you really want to do, then it's important to spend time educating yourself on the craft. Some people might think, well, they might see other people who post about trading that I made, 50,000 this day, I made 35,000 this day, etc. But realistically speaking, really, you might not necessarily be that person, right? Maybe you only make $50 a day, right? There's 5 trading days in a week. So that's an extra $250 a week that you make generating through trading. That's an extra $1,000 a month. That's an extra $12,000 a year. So that's not bad chump change to basically add to your life. But of course, as you start to get better, then you might have better days, right? I typically trade a very small account. You don't have to have, a very large account to make, several $100s a day. You can look at my account. From yesterday, I was up about 350. I ended up taking some profits, and I'm still up 205 on what I currently have now, which is about $7,000 in this account. I've posted multiple times the different trades that I've taken, and typically it's on small size. I haven't shown any large trades where I had, several hundreds of shares and have pulled out, the big plays most of the time, where I've made $200 or $300. Like for example, in NIO, I only had 50 shares. I only had 50 shares in NIO on the long and on the short, and was still able to pull out several $100s on that trade. As you can see in the Palantir, I've got 92 shares, and I'm well up over a point. And so you really don't have to have a lot of size in trades to be able to make a considerable amount of money. Can you? Sure, if that's something that makes you feel more comfortable because you're looking to take on more risk, that's entirely up to you. You could trade. I did it back then. I would trade, 5 and 10,000 and 15,000 share lots, and I would try to clip 25 cents, 30 cents here, because obviously the more size you have, the more you're going to make. You take 10 cents on 10,000 shares, you make $1,000. But the reverse is also true as well. If you lose 10 cents, then you're down 1,000 plus commissions, right? Nowadays, it's really small. The commissions are zero, but back then, when we were paying commissions, those were the things you had to worry about. And of course, the other thing that you have to take into consideration is the more size you have, the harder it is to get out. So those are other things that you have to take into consideration, especially for those who pay attention to the time and sales, and you put up a big offer, or you put up a big offer. People are just going to step all the way in front of you. And that's just the way the market works, because you want 84s and someone will say, okay, I want to get out of my 1,000 shares at 83. Someone steps in and says, all right, I want to get out at 82s, or I'll take 80s. I mean, shoot, if you play video games, if you play MMOs like I do, you see the exact same thing in those markets as well, where people are selling different things in video game markets and people constantly step in front of you. It's literally the same principles of supply and demand. And so that also, of course, is something that you have to take into consideration. So you can either become better at picking better scenarios, or you can take on more risk. That's entirely up to you. I choose not to take on that kind of risk. Sometimes I might trade 25 shares and I'll be up 3 points. I'll make $60 on 20 shares. I take almost next to no risk while taking on big trades. Could I take more size? Sure. Do I feel comfortable doing it? Sure. Do I need to? No, because I feel comfortable if I make a couple of $100 a day. At the end of the week, if I'm up 1,500 a week, if I do that 4 times out of the week, that's an extra 6 grand. If I do that every month, that's an additional 72,000 a year. I pay my taxes and then I just keep it moving. And then I put that money, of course, into the long term. And so that's basically what I try to show for people who are new. If it's something that if trading is something that you're really looking getting into, I would highly encourage you to not take on size, especially if you're literally brand new and you're learning how to put in you're learning how to put in buys and sells. You're learning how to hold. One of the most important tips of learning as a new trader is just the simple mechanics of when to buy, when to sell, learning how to look at a chart, spotting opportunities, and then of course scaling in, and of course scaling out. When you start to learn those, trading becomes so much more easy. You feel less nervous. The other thing that it's important to understand is that when you're trading that small, of course, obviously, if you're trading, 1 to 3 shares, which is what I recommend for someone who's just getting started, the most important thing is that it teaches you how to be successful, right? Because if you take losses, the losses aren't that big. I mean, realistically, from my perspective, what I typically look for is like a 1 to 3 to 5 ratio. Meaning, typically for every $1 that I'm risking, I'm looking to make between 3 to 5 at least on most of my trades. If I actually go through all of my trades, it's actually very rare that I take a loss on any trade for the most part. One of the most recent trades that I did take a loss on was NIO. Prior to that, I really haven't taken much of a loss. Usually because I've bought stocks that I just literally just buy in hell, and eventually the stocks go up and I'll either take a very small loss or I'll take a break even or earn a little bit. But that's neither here or there. But realistically speaking, for those who are getting new into trading, those few trades that you take where you're able to spot something, maybe you look up something pre-market, maybe you've been paying attention, you're like, oh, when this stock comes to this level, it looks like there might be some resistance. Like for example, right here in Workhorse, right? Excuse me, in Slate. You might look at this chart and you were like, you know what, look, there was a little bit of resistance right here and we're coming up to that same resistance area that we came to last time. Or you might look at it right here and you're like, oh, look, we're coming up to a little bit of resistance. I'm going to take a small position short, right? And so when you start to see these things, when you start to see these patterns, just like as a nurse, we have to recognize when we're when we're staring at a telemetry monitor and we're looking at a person's heart rhythm, we have to recognize patterns because it puts patients at risk if those patterns continue, right? That person has a dysrhythmia in the way that their heart is pumping, that can put the patient's life at risk. The same holds true over your trading account. If you're in trades and you fail to recognize patterns that are putting your trading life at risk, the result is you basically lose all of the money that you put up into your trading account. And so that's why it's important to understand pattern recognition, because typically pattern recognition is just literally where other people, right? When you see these candlesticks, this represents other people who have traded the stock, just like you're trading the stock right now. And it lets you know where other people or other traders have chosen to buy and where other traders have chosen to sell. And so that's information that, of course, that is very important, because more than likely, those same people who sold here will do the same thing over here. They'll recognize the pattern. Now, of course, that is not always the case, but for the most part, as you can see, it's typically consistent. For the most part, you'll typically see it. During news and then during choppy markets, there might be a little bit of leeway, right? But for the most part, as you can see, you typically see, even in stocks like this, that follows a pattern. And so when you're able to recognize, okay, this stock is coming up to a previous high, you might take an extra second about whether or not you think that you're going to go long, right? You might be thinking, well, maybe I'll go short. And then so what that causes you to do is it causes you to wait, right? It causes you to act more patiently when it comes into how to trade, whether or not to get into this trade for the long. Maybe you're thinking, well, let me wait and see. Let me wait and see if I start to see a little bit of a support start to build up, and then I start to see the stock start to break out and hold the support. Here's a perfect example, right? You can see in the Workhorse, where previously this is where we kind of fell off from last time, and then now you start to see, well, this is it. The stock is going to come off. And then maybe you start to get a little bit nervous because you start to see a green day, right? And then you start to see the exact same thing here. Oh, look, we might come up, even though we end on a red candlestick. The intraday movement is typically what shakes people out. And then you see, finally, you see the stock trade. You see the stock trade the stock trade to the downside, right? And then it kind of basically settles, right? Literally at the exact same point that it did last time, right? So it's a lot of times it's just learning these same, paying attention to support and resistances, and of course patience. As you can see, the stock didn't immediately slingshot up the moment it touched that same pattern. You can see right here, we still had one day here, and then we violently came right back down. So you might be panic selling, but as you can see, the stock is starting to recover. And typically you can look through different charts, and you'll typically see a lot of the same, right? You'll typically see a lot of the same, where you'll see stocks that will stop at certain price points, as you can see right here, right here, and basically the patterns that were formed right here to stop. Many of these stocks will typically follow these patterns, and so that's why it's important to be able to recognize charts, and of course start small. When you start having those small trades, right, it basically gives you confirmation that, okay, I'm starting to get it, right? Like like anything in life, like in nursing, when the teacher asks a question and you get the answer right? It lets you know that you're having understanding over the context of the information that's basically being given to you. And that's with anything in life, whether you're being a doctor or a lawyer. Once you start to be able to take the information, understand the information, and then be able to reply back in a way that demonstrates that gives you confidence. And confidence, when it comes to trading, is one of the most important things in anything in life. No matter what you do, the more confident you are, the more likely you are to be successful. And of course, with confidence also comes being overly confident. And so that's one of the downfalls of trading or anything in life. But one of the good things about trading with less than 25,000 in your account is that the PDT rule saves you from being overconfident, because you realize that if you become overly confident, you're punished very hard, right? Because you only have 3 trades throughout the entirety of the month, where you can only do X amount of trades, and then you have to wait, right? You can only do so many day trades within the month before you get recognized as a pattern day trader. And if you don't have at least 25,000 in your account, you get flagged, and then you can't trade for the remainder of the month. And so there's a really hard penalty for being overly confident. And so that's one of the reasons why the PDT rule is there. It's to stop young investors or new investors from becoming overconfident, and then basically blowing their entire account very quickly through, of course, churning. And so this forces you to kind of be like a sniper and basically hone your ability to recognize patterns and then pull the trigger so that you can execute your trades for a high probability, which is typically what you see when I execute my trades. Most of my trades are all successful. It's very rare. I haven't had many days where I look at my trades and I'm literally, all red, or the vast majority of my trades are all red. And in fact, they're quite the opposite. Typically all of my trades are all green. I may take different sizes. I might have 50 shares, I might have 20 shares, I might have 5 shares, but all of my trades are always successful for the most part. For the most part, it's very rare that I'll take a losing trade. Does it happen? Of course. I'm a human being. I'm not perfect. There's some times where I still become too confident. I get in a little bit too early, or I rush into a position because maybe I don't want to miss out, right? FOMO sometimes occurs, or sometimes I don't pay attention to the trend, right? Some people don't pay attention to the trends, and you might look here and you might take advantage and think, I'm gonna go short. There's some people that only go long. There's some people that only go long. There's some people that only want to go short. Every scenario, they look at this the exact same way, right? They'll look at this trade, and I used to do this too when I first started trading. They'll be like, oh, they'll be like, yeah, I clipped it from here. I clipped it from 41.50 and I clipped it all the way down to 40.80, right? I took 80 cents, but then you missed the $10 rally, right? So there's nothing there. It's like, great, you made a good trade, you made an 80 cents trade, but you literally took so much risk and you missed the boat, right? You missed this. You were able to clip this, but then you missed this, right? So there's really nothing to gloat about, and that's one of the things. I remember people doing that all the time. When people would shout out and be like, "Yeah, I clipped this on the short," and I'd be like, "Yeah, but the stock went up $5 after that. Like, you clipped it for 20 cents, but then you missed $5 to the upside. Like, what happened, right? Do you only go short?" It's like, no. As a trader, you have to learn to go short. You have to learn to go long. And so these are some of the things that it's important to understand when you're first starting. And of course, the more that you can minimize your losses by having small sizes, by taking typically 1 to 3 shares, so that you can learn to scale in and you can learn to scale out. So that also, because later on, once you start building up that positivity, once you start recognizing that, okay, I do have an understanding, I'm able to recognize patterns, I'm able to scale in, I'm scaling out, I'm not getting shaken out, that then is your confirmation to basically start to level up, right? So instead of trading 1 to 3 shares, now you're trading between 2 and 6. So now you're scaling in with 2, and then you're you scale in with 2, and then 2, and then you're scaling out 2, and then 2. Just like you see me do it, right? Even though I have the ability to take on, at least with my account, typically several hundreds of shares, but for the most part, I typically still do the same way. I might scale in with 2s, I might scale in with 5s, I might scale in with 10, but I still trade the exact same way. And so it allows me, maybe I got in a little bit too early. I've shown examples where I've gotten in a little too early, but I'm still able to adjust the trade because I'm scaling into the stock, right? So maybe you executed a little too early. Maybe you thought that the stock right here was going to form a pattern and then bounce, and so you jumped the gun and you put your limit order there at $51, and then the stock kept on falling, but you went all in. Now you've got to wait for the stock to come all the way back up before you even break even. But of course, if you scaled in with 2 and you were like, "Woof, okay," and you waited, maybe we might see resistance here. So you put your 2 in down here, so then that brings your average down, and then you see the stock continues to fall. But for the most part, that the stock is going to move back to the upside. There's no overwhelmingly bad news about the stock. So you wait, you scale, and then you scale back in at a lower point, bringing your average, maybe instead of all the way up here, maybe now your average is somewhere around here. So it makes it a little bit easier for the stock and for you to rebound and basically regain the trade so that you're not taking a loss. But typically that comes with time. And so that's one of the most important things when it comes to trading, is giving yourself enough time to learn the craft. Just like no matter what it is in life, you go to school for something, you got to do 4 years or 8 years. If you're gonna be a doctor, you're doing 12 and more years. If you want to be a lawyer, if you want to be a plumber, etc., no matter what it is in life, you have to allocate yourself enough time to just learn the basics, right? Like I said before they even let you touch a patient, you spend years taking in information, and then when you actually finally get to put your hands on a patient, there's someone there that's watching you. But that's not the case when it comes to opening a small account, whether you're with Robinhood or Webull or whatever the platform that you're using. It's just you and the computer, or maybe you join like some sort of YouTube chat room just so you have kind of like other people that you're paying attention to who are calling out plays, etc. But for the most part, there's no one there to be like, "Hey, don't execute that trade. Don't you see this?" Right? So all the more reason for you to start small, take your time, build up a knowledge base, and then execute.